SA200 series. SA200 Overall objectives of the independent auditor and conduct of audit in accordance with standards of auditing. Overall objective of independent auditor is to obtain reasonable assurance that the financial statements are free from misstatement. It enables auditor to arrive at a conclusion whether the financial statements are prepared as per the applicable FRF and express his opinion in the audit report. If auditor fails to achieve this objective, qualified opinion is not sufficient. Auditor shall withdraw from engagement and auditor shall issue disclaimer of opinion. How will he conduct his audit? First one, by complying with ethical requirements. Second, by maintaining an attitude of professional skepticism. Third, by exercising professional judgment. Fourth, by obtaining sufficient and appropriate audit evidence. And fifth, by following all the standards. What are the ethical requirements? Auditor shall follow ethical requirements while discharging his duty as an auditor. The ethical requirements are integrity, honesty and straightforward, objectivity, opinion unbiased, confidentiality, client info should not be disclosed to outsiders, professional competency and due care, and professional behavior. IOC, PCDC, PB. Independent. The judgment of auditor is in his own wish, his client wish, or under influence or bias should not be there. If such thing happens, the auditor's independence is deemed to be compromised. There are two types of independence: independence of mind and independence of appearance. State of mind. Auditor's opinion should be free from influence and in appearance disclose all facts and circumstances. Otherwise, auditor's integrity, objectivity, and professional skepticism will be doubted and compromised. By maintaining an attitude of professional skepticism, it does not mean the auditor should be doubtful, but have a vigilant attitude and remain alert to possible misstatements in financial statements. Example: 5C. Contradictory audit evidence, condition indicating fraud, considering the integrity of management, non-compliance with law and regulation, going concern appropriateness. How to remain alert? By critical assessment of audit evidence gathered. Why to remain alert? Reduce the overall audit risk. By exercising professional judgment, the auditor use his knowledge, experience, and training to conduct proper audit. It includes interpretation of standards and ethical requirements, and making a decision through audit is not possible without professional judgment. Example: the materiality, the nature, time, and extent, and whether the sufficient evidence is obtained. What is misstatement? Misstatement is difference between amount, classification, presentation, and disclosure between financial reporting framework and as presented by the entity. What is the process as an auditor? Application for auditor, overall scope and objective of audit planning, audit procedures performed, audit evidence obtained, audit conclusion formed, and audit report. Inherent limitations to do audit. A financial statement is complex nature and the items valued on management judgment and estimates are highly subjective. Always on intent, uncertainty and estimates cannot be eliminated. 2. Nature of audit procedures. Practical limitations. Sophisticated design and concealed fraud could not be detected by the auditor, and the legal limitation is that the audit is not an investigation, so the auditor has no legal power to search. Because its limitation in time and cost. The user expects audit complete. Auditor has to do it within the reasonable time and cost. Therefore, auditor only checks the risky areas. 4. Other matters. GRL FRD. Future affecting owing concern, completeness of related party transaction, non-compliance with law and regulation, and management fraud. Thank you. SA 210. Agreeing the terms of audit engagement. As per SA 210, auditor before accepting or conducting the audit engagement shall ensure the common understanding by the means of audit engagement letter and preconditions. The preconditions are the appropriate FRS is followed and management is acknowledging and understanding its responsibility to prepare and present financial statements as per the applicable FRF, apply internal control procedure, and provide auditor with access to books, written representations, and information and explanation from other employees and management, owners and employees. Audit engagement letter. The audit engagement letter is issued by auditor to management or TCWG to develop common understanding between both parties in accordance with SA 210. It shall include objective and scope of audit, responsibility of auditor, responsibility of management, identification of the applicable FRF, and other matters. According to SA 210, new engagement letter should not be given every year, but if there is only need to revise the terms and remind the entity of its terms, it should be given. Example A: change in management and ownership, change in size of entity, change in legal or regulatory framework, change in financial reporting framework, management has misunderstood the objectives, management requests for change and the auditor accepts it with reasonable justification, better compliance with standards of auditing. If rejected, it provides lower level of assurance. Agreement on revising is in terms of engagement. SA 220. Quality control for audit of financial statements. SA 220 and SQC1. SQC1 is applicable to firm and SA 220 is applicable to an audit engagement. Quality control. At the firm level, it's HILM, human resource, ethical requirement, acceptance and retention of client, leadership responsibility, monitoring, and engagement performance. And at individual level is delegation, direction, supervision, and review. Human resource. Established procedures and policies provide reasonable assurance that it has employed competent, capable, and committed personnel to conduct audit. The policy should address recruitment, competence, capabilities, compensation, performance, promotion, career development, and taking care of physical needs. Ethical requirements, same as SA 200, IOC, PCDC, PB. Acceptance and retention of client. Information to be obtained while accepting and continuing a relationship with client when before accepting new engagement with existing client, before accepting new engagement with new client, and before continuing existing engagement with existing client. What information should be obtained? The integrity of management and TCWG, significant matters arisen during current or previous audit engagement, competency of engagement team, and ability to comply with ethical requirements. Leadership qualities. Engagement partners should take responsibility overall audit quality. Engagement partner has to emphasize to engagement team following things: compliance of standards on auditing and legal requirement, and issue of appropriate audit report, complying with quality control policy and procedure. Quality is essential in performing audit engagement, raises the concern without fear of reprisal. Monitoring is to obtain reasonable assurance that quality control policy and procedures are relevant and adequate and operating effectively. Compliance with standards of auditing and legal requirements. Issuance of appropriate auditing report. Quality control system appropriately designed and effectively implemented. Follow up so necessary modifications can be made. Ethical performance. Proper supervision and review is exercised and overwork of article association. Quality control are properly implemented and documented. Engagement teams are briefed with the understanding, comply with standards of auditing, process of supervising, training and coaching, review of the work performed, and appropriate documentation of the work. SA-230 Audit Documentation. Audit documentation means recording of audit procedures performed, audit evidence obtained, and audit conclusions reached. Evidence that the overall objectives had been achieved on the basis of conclusion reached. It's also the evidence that planned and performed in accordance with standards and law. Need, utility, advantage, or purpose of audit. It helps in planning and performing the audit. It helps in supervision and review, gives us accountability. It has future reference, external inspection and investigation, and quality control review and inspection. Who needs to be documented or what needs to be documented? The nature, timing, and extent of audit procedure, records of procedures, evidence, and conclusions, and significant matter as per the auditor's judgment. Documents to includes copies, correspondence, letter of confirmation, analysis, summary of significant matters, issue memorandum, and checklists. Auditor has ownership and the custody of the audit papers. It has not duty to provide access to any other person unless it is legal or professional duty to do so. Factors affecting content, size of the entity, risk of material misstatement, procedures and methodologies, extent and nature of exceptions, and conclusions. Completion memorandum. The audit document summary consisting of significant matters and how they were addressed. It's a part of audit document. Benefits to big client and complex audit, and its benefit is review of inspection of documents. Identify significant matters and whether is there an SA he couldn't comply with. One or more files can be made in physical or electronic form containing audit document for specific engagement. Audit shall be assembled in timely basis. It is 60 days after the audit has been done. It is only an administrative process and no new procedure can be done on which the evidence is obtained. It only includes deleting or suspending documents, sorting, collating, and cross-referencing and signing off after conclusion. The auditor must not delete until 7 years. SA 299 Joint Audit of Financial Statements. Category 1 Audit Planning, Risk Assessment and Allotment. Engagement partner and other key members of engagement team, joint auditor, shall involve in planning the audit. Joint auditors shall establish the overall objective of audit strategy that provides the development of audit plan. Discuss and develop joint audit plan. Obtain common engagement letter and common written representation. Divide the audit work among themselves. Identify the specific and general audit areas. Discuss and document the nature, timing, and extent of audit. Work allocation document. Identify and assess the risk of material misstatement and communicate key risk areas. Category 2 Responsibility and consideration among joint auditors. Each joint auditor shall be responsible only for the work allocated to him, and on the other hand, all auditors shall be jointly and severally responsible. Any other joint auditor and that the matter deserves an auditor, the auditor shall communicate the same to other auditor in writing prior to completion of audit. The audit conclusion and reporting. Joint auditor is required to issue a common audit report. If one auditor disagrees, report is separate audit report. The joint auditor is not bound by the view of majority. The common audit report shall reference special audit report and the separate audit report shall reference in other matter paragraph common audit report. Amendment. Each joint auditor is to be assumed that other joint auditor has cared for his work as per the essays issued by ICAR. and there is no need to review the work of another auditor. Advantages: mutual discussion, sharing experience and expertise, better quality of work, better service, lower cost, lower workload, lower staff development cost, healthy competition, and better performance. Individual responsibility: work allocated to the team, nature, time, and extent of audit procedure, evaluate internal control, adequate documentation, and audit review report. Joint and several responsibility: audit work is not divided, nature, time, and extent of audit procedures, present and disclose as per the appropriate FRA, matter brought into knowledge of all by one, and compliance of audit report with statutory requirement. SA 260: Communication with TCWG. The objectives of auditor as per SA 260 is communicating responsibilities of the auditor and overview of the planned scope and timing of audit, obtain relevant information to audit, and provide TCWG with timely audit findings. Provide effective two-way communication between auditor and TCWG. What is effective two-way communication? TCWG to understand matters relating to audit, auditor in understanding the entity and its environment, TCWG in fulfilling responsibilities to oversee the financial reporting process and therefore reducing risk of material misstatement. In listed entities, the auditor must tell that the statement engagement team has been complied with all the ethical requirements and independence, and the total fee charged is greater than that of non-audit service. SA 265: Deficiencies in internal control to TCWG. A deficiency in internal control exists when internal control is missing or present but inadequate to detect and timely correct the misstatements. Significant deficiency in internal control: a deficiency which is individually or with other deficiencies sufficiently material to merit the attention of TCWG. Matters which could be considered as deficiencies. The matters are likelihood leading to misstatement due to deficiency, susceptibility to loss or fraud, subjectivity or amount estimated, amount exposed to deficiency, and volume exposed to deficiency. Example: absence of risk management procedure, ineffective risk management procedure, ineffective response to risk management procedure, and inability of management to oversee financial statements making.